everyone. This is PJ with Simplicity in Des Moines. Thank you for joining us this afternoon. We've got a lot of not only new information to share, but great information about a brand new product and an existing product, actually, that's getting a lot of attention with American Equity as well. Joining us today will be Caity Eger, the development specialist for American Equity, and then at some point in the presentation, we'll have Bill Ballard, the Vice President of Regional Marketing, available on the call as well. So I want to start early because we got a lot of material to cover. Hang with us here. So right now, however, I would, because we've got a lot of material to share, we're probably going to postpone questions to follow up with you as far as answering those questions, if you don't mind, because of the extent of material that we do have to cover today. So right now, I will give you our 800 number to reference at the end of well, actually, for follow-up afterwards. Simplicity Des Moines, 800-747-5612. Brenda, Jamie, and myself, PJ, are the annuity specialists within Simplicity Des Moines. Obviously, American Equity marketing team is also available, but you know, we want to have an opportunity to talk with you, answer questions, get to know you a little bit more and your business model, because that helps us, you know, develop some sort of a kind of a working plan, if you will. So we can get this kicked off. I'm going to turn it over to Caity Eger, and she will get us started with some great product information. Thanks, Caity.
Thank you, PJ. I'm going to go ahead and share my screen. So before we kick it off, I want to give a big thank you to Simplicity Des Moines for giving me the opportunity to be here and speak with you all today. I know it's definitely been an interesting year and a half. So know that we're here to help, and we will continue to support you as we continue to figure out the new normal together. So here you see my partner in crime, Bill Ballard, the VP of Regional Sales, and then myself, the Business Development Specialist. And our roles are, he's mainly an external wholesaler. I'm like an internal, external wholesale hybrid. And together we handle Iowa, Illinois, and Missouri. And we've got some really great information that we're going to cover today. Hey, Bill.
Hi, Kate.
So today we're going to talk about the EstateShield 10, our new product that we just launched, our top accumulation product, and why you should do business with American Equity. So before we get into it, I'm going to give you guys a quick look at the new sales regions. So we did expand. We went from 6 sales regions to 9. So know that you've got a dedicated regional, BDS, and marketing service phone rep, and we're all here to help you. Don't ever hesitate to call with any questions, concerns, feedback. If you need materials, an illustration, you give us a call. You're going to see our extensions are all listed there. And I will also, I'm fine with giving out my cell phone even. I'm working remote right now, so that is the best way to reach me at this time. But know that we're all here to help you. And just to touch on a service item, you know, we set the bar when it comes to our service. Our service is truly second to none. We're going to issue business within 24 to 48 hours. In fact, I just talked to an advisor today. He sent in an application yesterday. It was approved by suitability. We faxed out the transfers this morning. All right, so we're quick. You know, we're going to, as long as it's all approved by suitability, we're going to get that business issued fast. If it's cash with app, it's normally 1 to 2 business days. Transfers we get out very quickly as well. If you're not currently contracted with us but would like to be, we'll get you up and running within 48 hours. As long as everything checks out fine with your background, you're going to be ready to go. We also overnight our contracts once they issue to an advisor that are over $100,000. And most importantly, in my opinion, we answer the phones. We're all busy. We've got a lot going on. We don't have the luxury to sit on hold and wait. When you call American Equity, you will get a live representative on the phone, typically within 60 seconds or less. Now, without further ado, let's go ahead and jump into it. So with the Shield Suite, you know, we have our IncomeShield. That's our top true guaranteed income. We beefed up we increased the payout factors. So with that, that's going to put us back towards the top with guaranteed income. If you haven't looked at a guaranteed income illustration on our IncomeShield recently, I highly encourage you to check it out because we are competitive in that arena. And then we've got our AssetShield. Back in February, we made some pretty big enhancements to that. We're going to go into it a little more in depth here in a moment. And then we introduced the EstateShield. So with the EstateShield, you've got the EstateShield 10, you get a 25% upfront bonus. It's designed for not only accumulation, it comes in with a free guaranteed income rider and an enhanced death benefit. So how that works, day one, you put $100,000 in, your contract value is $100,000. The benefit account value is $125,000. We've got 12 interest crediting strategies. We've got annual point-to-point and 2-year point-to-point options. We'll discuss those further in a moment. And it is a modified single premium annuity, which is a little bit different with us. So what that means is you can continue to add premium to the EstateShield for the first contract year during those first 12 months. Any premiums we receive in the first 12 months will get that 25% bonus. But once you cross into year 2, you can no longer add to it. Now, there are 3 ways to increase income with the lifetime income benefit rider on the EstateShield. You get the 25% bonus on that benefit account value. And then how that grows is 150% of whatever the index credit to the contract value is. And that 150% multiplier is locked in for the life of the policy. So even after your client turns on income, their lifetime income payments will then increase each year by 150% of whatever the index return is. I guess it could be every other year, depending on what index option you're in. There are 2-year point-to-point options built into this product. And then, of course, the well-being benefit. With our well-being benefit, ours is based on the 6 activities of daily living. So your client can continue to be in the comfort of their own home and access this benefit. It's going to double their lifetime income benefit payments for a maximum period of 5 years. And we make that process simple. All we need is a physician statement showing that the client is unable to perform 2 of those 6 activities of daily living without assistance. And they can activate this benefit. And it can be anyone helping them. It can be a family member, a spouse, a child. So ours is pretty unique in that sense. It's non-confinement driven. We just went into that in more detail in my last slide. So let's keep on trucking along. With our enhanced death benefit options, this kind of sets this product apart from the other competing products. So you get a 5-year payout of the full benefit account value. That's pretty standard. But we offer a lump sum payout option for the beneficiary where they can take 75% of that benefit account value. Whereas other products in this arena that are competing in this arena only allow the contract value as a lump sum payout. Now, I'm going to show you a little snip of one of the illustrations later on here where you can see that that benefit account value, once you factor in that 150% multiplier, is much higher than that contract value. Pretty standard minimum guaranteed surrender value. The issue ages here on this product are different. Typically with our other income products, the client must be 50 for the income rider. With the EstateShield, we did back that down to age 40. The issue ages are 40 to 75. Got a nice low minimum initial premium to start, $5,000. Now, if you ever run into a case where your client has over that maximum premium amount you want to make sure you get either me, Bill, or someone in the marketing team involved. We're going to work with you and suitability to see what we'll be willing to take. There is a little bit of flexibility there. The surrender charge schedule is pretty standard as well, starting in at 9.2% year one and then dwindling down. When it comes to liquidity, here's another difference here with the EstateShield. We allow 10% of premiums paid as the penalty-free withdrawal starting in year two. So that is great from a planning standpoint. If you've got Mr. Client puts in $100,000, you know he can take $10,000 out starting in year two. That amount will not fluctuate depending on the contract value. Whereas with other products, that 10% of the contract value is going to vary year by year. And if they're using that, you know, it's going to be hard to make up that loss when they're taking out $10,000. They then have to get a $10,000 return each year to make up that deficit. So this is great from a planning standpoint. The client gets 10% of premiums paid, available as a penalty-free withdrawal starting in year two. We do also allow systematic withdrawals. If you have a client that is allocated to the fixed value, they can turn those on in 30 days. We don't see a whole lot of that though. And then of course the enhanced benefit rider. The enhanced benefit rider is the terminal illness rider and the nursing care rider built into one. So with that nursing care rider, if your client is confined to a qualified nursing care facility for 90 consecutive days, starting after the second contract year, so year three, then they can walk away penalty free. With the terminal illness rider, if they're diagnosed with a terminal illness after the first contract year, they can also walk away penalty free. I should clarify, if they're diagnosed with a terminal illness where death is expected to result within that year of the initial diagnosis, then they can walk away penalty free. Now let's talk about the different index options on the EstateShield. We did pull in our new multi-asset class index options. So we have the Bank of America Destinations Index, the Credit Suisse Tech Edge Index, the SG Global Sentiment Index. You also have the S&P 500, Dividend Aristocrat Index, and the S&P 500. So with the new multi-asset class index options, you'll notice we have an annual point-to-point and a 2-year point-to-point with participation rates. On the annual point-to-point option, the participation rate is 50%. On the 2-year point-to-point, we bump that up to a 70% participation rate. So if your client's willing to wait a little bit longer, they're going to get a higher participation rate. And then with the Dividend Aristocrat Index option, you'll notice there's caps on the annual and 2-year. On the S&P 500 annual point-to-point, there's also a cap. On that 2-year point-to-point, it's capped, and then that monthly point-to-point is capped as well. So there is going to be a higher upside on those new multi-asset class index options with that participation rate, because you know a cap is a true cap. Let's talk a little bit more about these new index options. They were originally rolled out with the AssetShield enhancements we made in February, but just to recap, the Bank of America Destinations Index is something we designed in collaboration with Bank of America. All of these multi-asset class index options are exclusive to American Equity, so you're not going to see them anywhere else. But what it is it's weighted between components. Those components are gold, which traditionally hedges against inflation, U.S. Treasury, and then the S&P 500 low volatility. And the S&P 500 low volatility has outperformed the total S&P 500 for the last 15 consecutive years. So it's the 100 lowest volatile companies within the S&P 500. And those are going to be weighted, and those weights are adjusted away from what's underperforming and toward what's outperforming in an attempt to capture those gains. And then you'll see the ticker symbol there below, BOFADST5. So you can go out and track this on Bloomberg. Then we have the Credit Suisse Tech Edge. This one is very unique in a sense that it's almost like a managed money account. It's powered by Salt Financial, and they're pulling intraday and end of day data and making those adjustments. So the components of this Credit Suisse Tech Edge Index are 4 US tech and biotech focused ETFs and 2 fixed income components. And then the one that I'm actually the most excited about is the SG Global Sentiment Index. So it's a lot like the Destinations Index in a sense that it's treasuries, gold, but instead of being restricted to just domestic, you're now getting into the European and Asian indices as well. So with this, it's a global excess return, and it's using 6 cross-asset capital market indicators to assess market sentiment. And it determines whether the market's in a growth, an intermediate, or a shrinking phase. So they're set to those 3, and it's going to adjust accordingly. It's something you can also go out and track on Bloomberg. And I'll go ahead and say that I know not everybody is comfortable with these multi-asset class indexes. It is something that is fairly new to American equity. We rolled it out in February. So what I did to become more familiar with it, let's go ahead and skip by this. Everybody should know what the S&P 500 and Dividend Aristocrat Index options are. But what I did was I bookmarked these microsites, and that's something that I went out and I read up all the information. They're constantly updating how the different index options are weighted. You can go out and see the adjustments that have been made. I highly encourage you, take down these microsites and visit them and get familiar with them, because these multi-asset class index options have a much higher earning potential, and it's something that we're definitely excited about. Now, I don't expect you to write all these down. I'd be happy to send it in an email after this meeting, but something I would definitely encourage you to take the time to go ahead and bookmark these websites. With commission, the call, the EstateShield 10 pays 6.5% upfront street comp. We all know it's important. We want to know what we're going to make on it. And that, in a sense, that in a nutshell is the EstateShield. It's a quick overview. There's a lot to it. So definitely don't hesitate to reach out with any questions. But at this time, I'm going to go ahead and shift gears. Let's talk about the AssetShield. AssetShield is our top accumulation product. We made some big enhancements to it back in February. We're going to start by covering the AssetShield 10. Now, with the AssetShield 10, I don't want you to get too caught up in everything going on this slide, because I know it's busy. There's a lot. What I really want you to focus on are just a few things. So look at the column to the left, PR. That's the participation rate. This is AssetShield at its core. There's no fees. We've got the Bank of America Destinations Index, the Credit Suisse Tech Edge, the S&P 500 Dividend Aristocrat Index, the SG Global Sentiment. You get either an annual point-to-point or a 2-year point-to-point. And you'll see the participation rates on that left-hand column. Then if you look clear to the right, you'll notice a column PRR. That's the performance rate rider. So for a small fee, you're going to see participation rates that are 150%, 180%, 210%, eye-popping numbers there. So with how the fees work, it's 1.5% on the annual index options or 3% on the 2-year options. And we calculate the fee off that contract value day 1 each year or 2 years, depending on which option you're in. So you're going to know what that fee is going into it. And we know fees aren't for everybody. Maybe your client has a fee and they come to you and they don't like it. They don't want a fee anymore. Pretty simple. All you've got to do is change the allocations and move out of that performance rate rider, either the next year or 2 years, depending on what option it is. Let's just focus in on these multi-asset class index options. So with the Destinations Index, it's 80% for the annual point-to-point with no fees, or you can buy it up, put some skin in the game, and get a participation rate of 145%. The 2-year option is 115% with no fees, or you can pay that 3% fee and it goes up to 200%. Both the Credit Suisse Tech Edge and the SG Global Sentiment Indexes are 85% on the annual point-to-point with no fees, or you can pay that fee and buy up that rate to 150%. Then on the 2-year point-to-point options on the Credit Suisse Tech Edge and SG Global Sentiment, the annual point-to-point or the 2-year point-to-point is 120% with no fees. Or you can pay that fee and buy that rate up to 210%. This is the AssetShield 10. We also have the AssetShield 5 and 7. We added the new index options and that performance rate rider to both the AssetShield 5 and 7. You only have an annual point-to-point option on the shorter term products, so you're not going to get that 2-year point-to-point. So you're shaving a few years off that surrender charge schedule, but you still have some pretty strong rates there. 75%, 80% with no fee, or you can buy up those rates. We don't need to spend a whole lot of time here, but you guys get the idea. We've got options that you can tailor this product line to fit different needs. AssetShield 5, we'll take a look there. I don't know about you, but I'd be very happy with a 130% participation rate on just a 5-year product. And I am going to show some illustrations at the end of this on the AssetShield as well, because we all know, yeah, these look good. The participation rates seem pretty high, but what does it actually do? How does it perform? So we're going to look at that here later on. We've got, what I'm going to show you first is the AssetShield, the 2-year point-to-points. I'm going to focus on the Credit Suisse Tech Edge and the Global Sentiment Indexes. So we know that you're not always going to have the best 10-year period or the most recent 10-year period, or the worst. The truth lies somewhere in the middle. What I'm going to focus on right now is the worst 10-year period. So let's look at the Credit Suisse Tech Edge Index. The worst 10-year period was from 2004 to 2013. And you'll see that the years that are zero are just the odd years, okay? It's a 2-year point-to-point. So in this case, it hits every chance it could have. And it is buying up that rate. So it's a 210% participation rate, 3% fee. What you're looking at on this screen here is net. It's already factoring in that fee. So even the worst 10-year period had an annualized return of 9.19% on the Credit Suisse Tech Edge. There are some pretty big years there once you factor in that 210% participation rate. You'll see in year 8, it was 47.22%. Year 4, 16.16. Pretty big returns there. And then let's look at the SG Global Sentiment Index. Again, going to focus in on the worst 10-year, which with this index, the worst 10-year period was from 2006 to 2015. But the annualized return there, even the worst 10-year period, came in at 11.94%. Also some pretty significant years there. Year 6, once you factor in that participation rate, 55.54%. 24.05% in year 2, 29.59% in year 10. You know, a small fee, 3% every other year to get a 210% participation rate can really maximize those results. Now, I am going to bring up the AssetShield 5. We're looking at a very generic illustration, $100,000 put in. You're using the participation rate, the performance rate rider, buying up that participation rate. So on the AssetShield 5, you're paying 1.5% fee year by year. Everything you see here is already factored that in, and the participation rate is 130%. So, gonna stay with let's focus on the worst 10-year period. The worst 10-year period had an annualized return of 5.29%, and this is just a 5-year product. That's a pretty darn good, strong rate for a 5-year FIA. And there are some pretty huge double-digit returns that you'll see, 17.6 in year 7. You've got some in the 10, 9, 8 range. In fact, the only year it didn't hit, in that case, 0 is your hero. So this is what that Credit Suisse Tech Edge annual point-to-point looks like on the AssetShield 5. The SG Global Sentiment does come in a little bit higher. The worst 10-year period has an annualized return of 7.13. Again, you're going to see some pretty big double-digit returns there as well. And that's the AssetShield 5. Let's take a quick look at the AssetShield 7. Oops, went too fast. Here we go. The Credit Suisse Tech Edge annual point-to-point on the AssetShield 7 with that performance rate rider has a 145% participation rate. So you're tacking on 2 years, but that beefs up the participation rate a bit for you. And the worst 10-year period had an annualized return of 6.06%. And this is on a 7-year product. Again, there are a lot of strong returns there. On the SG Global Sentiment, it is a bit higher. The annualized return on the worst 10-year period there comes in at 8.10. We do have a lot of really great marketing pieces available for you as well. Not only on the AssetShield, we have some on the EstateShield too. But here's one I'd like to highlight. We've got a lot of advisors using this. How does the AssetShield 5 work? So this is going to back it up to 2003, show you what the SG Global Sentiment Index would have done. And then it's factoring in that 130% participation rate. So you can see it year by year. There's only 1 year in there where it was in the red. And that's on the AssetShield 5. We also have it on the 7. With that, it's 145% participation rate. And then how does the AssetShield 10 work? So these have all been updated to pull in that SG Global Sentiment Index option. These are great materials to have handy. You can pass them out when you're meeting with prospects. We also have customizable ad slicks. So just breaking it down, keeping it simple, this is a really great piece to use. When you meet with a prospect, first you've got to identify what the risk tolerance is. What are they comfortable with? So this is a really great piece, and it's something we've got available that you can customize. You can add up to 3 lines. We've got most advisors using their just name, phone number, email address. But with how that works is you put in an order for the ad slick on our website, or you can give us a call and we'll do it for you. Our advertising department will put that together, typically within 3 to 5 business days. And then you can take that out to be printed and distribute. We've got a lot of advisors using our ad slicks as placemats for dinner seminars. I want to say a quick hello to our compliance department real quick, everybody. Hello, compliance. Now, there is one other thing I want to show you. So going back, I said I was going to show you an EstateShield illustration. What I did here, I ran it on a male, age 60, $100,000. Now, on this illustration, what I'm showing is just the RMD. So you've got Mr. Client wants to just grow his death benefit for his heirs. He doesn't have any plans on accessing this money himself. He's got to take his required minimum distribution. So we've got that in there. But take a look at the benefit account value column and then the contract volume column. So So you get that 25% bonus day one on that benefit account value. It's also growing year by year at an accelerated rate. You've got that 150% multiplier. So you're getting 150% of whatever the index credit. The BAV growth rate, this shows you the actual percentage that that's growing at, factoring in that multiplier. So you see the benefit account value is going to be much higher than that contract value. That's kind of what really hit it home for me, the importance of having that lump sum payout option. 75% of that benefit account value as a lump sum payment for the beneficiary is a really great option to have. And it's something that the other competing products don't offer. So keep that in mind. Now I want to show you income. So with this scenario, we have a 60-year-old male, $100,000, turning on income in 10 years. There's a 10-year wait to turn on income. You'll see it starts in at $11,230, but it's going to be growing at 150% of the index credit even after they turn on income. So you see how that guaranteed income payment continues to grow even after they turn that on. We also have an ad slick available on the EstateShield. It's something I highly encourage you to use if you haven't yet. This is what that looks like here. Obviously, we've got sample there, but you just plug in what you want on those 3 lines, and our advertising and communications department will get that put together for you. So I guess what I want to just recap on is we've got the EstateShield now. If you haven't looked at a full illustration, I definitely encourage you to. I just showed you a little snippet of one today. Give me a call, call into marketing, or the illustration software is available on our website. With the AssetShield, if you haven't checked an illustration out on the AssetShield yet, I definitely encourage you to do that as well. And I guess if you haven't done any business with us, send us a ticket. I think you're going to be pleasantly surprised at how easy it is to do business with American Equity. You know, you've got a great team to support you behind the scenes. We answer the phones, and we're going to make that process as simple as we can. With that, I want to say thank you to everybody tuning in today. Bill, do you have anything you want to add? I saw you unmuted yourself.
Nope. Just want to say, tell everybody thanks for taking time to listen to Caity talk today. She's pretty good at talking, isn't she? I think you all got to agree with that. I was kind of laughing because I was gonna send her a message and tell her to mute her cell phone. Then I realized she was probably talking on it. So, but no, hey, we appreciate your business, and you know, use Caity, use myself. We'll do anything we can to help you guys earn business. You know, between this product, the EstateShield, and then the AssetShield and the IncomeShield, I think we've got a pretty good opportunity to generate some business for all of our advisors in one way, shape, or form. And we have something that'll fit everybody's clients' needs in one way, shape, or form. And we're really excited about that, and really looking forward to a great second half of the year. So thanks for all your time. Appreciate it.
Everyone have a good rest of the afternoon and rest of the week. Take care. Thanks for joining us. Bye-bye.